Deven Choksey is now joining us live. Deven, good afternoon. As far as recent market trends are concerned, what do you make? It's just a pause before we see a further up move?
Good morning, Pankaj. Well, I think the market currently is taking the adjustments, I think largely because of the derivative contract which is expiring tomorrow. As we have seen in the month of September, overall the open interest position built up significantly. And that's where I think you are seeing the bout of profit booking taking place in the respective counters led by Reliance. To me, I think it appears a very healthy correction that I want to call it as. And maybe I think the next contract which starts from after the expiry of the contract tomorrow, you would possibly see, I think, a further build-up of the position largely on few counts. One, the October is expected to basically bring more cheers with the market, largely because the RBI is expected to bring down the rate of interest and indicate, I think, the accelerated pace of bringing down the rate of interest going forward. And on the other side, I think with the time series data coming out on the auto and I think the other commodities, probably I think it would drive the market due to I think the higher demand push that we have seen in the last month. So overall, we expect October to be a good month, also considering the fact that it is in the festive season.
As far as the board, following RBI meet is concerned, say if they cut about 25 basis points, which now the street is factoring in, but they say that they are done for now, or they give a not so dovish guidance, would markets take it on the negative side?
Well, I think the market has absorbed, I think, no rate cuts also in the past, and probably I think it has remained quite steady, even though I think the rates have not been cut in the past policy reviews. So anything which comes on less than expected side would have a very short-lived effect as far as the market is concerned. As I see it, I think the growth is imperative as far as the measures or the monetary measures are concerned. The government has been taking a lot of fiscal measures and the monetary measures are being taken or will be taken by the RBI, that is understood. Given that kind of a situation, we believe and would like to believe that rates would be cut and probably you might see before the closure of the financial year at least 50 basis point cut in the interest rates.
As far as some of the stocks are concerned, let's just talk about Reliance. Do you think it's one of the most interesting play, irrespective of where the markets are going and irrespective of the recent run-up?
In fact, Reliance could be taking the lead as far as the up move in the market is concerned in coming months. We believe that most of the global funds are now looking at India to buy into the Indian markets and their preference would stay with the large cap stocks. Also because many of the large cap stocks are valued comparatively at a bargain levels, I think vis-a-vis the mid-cap peers. Reliance is definitely, I think, one among those where it could possibly start leading the market, largely because it has completed the capex programs in all the business verticals in which they are operating. The results are likely to come out in subsequent quarters now, having completed those capex programs, be it the refining segment, be it polymers and plastic segment, or be it telecommunication or the geo segment as we call it. I think the results would be more stronger going forward and the visibility on earning outlook would stand improved going forward. So Reliance could lead the charge and probably I think the stock holds good potential for appreciation.
What do you make of the recent fundraising? So, we've seen Bharat Financial, Satin Credit Care, we had 1% beverages yesterday. You think liquidity is ample even for primary, secondary market offerings?
Absolutely, I would think so because most of the IPOs which have come up, most of the QIPs which are happening, I would think that it is the appetite of the investors to buy into the quality papers, which is forcing the companies to issue new papers and raise money. That's where I think you are seeing most of the actions, and I would not be surprised to see many more such kind of papers coming out in the market and raise money, because the growth program which many companies have undertaken, they would like to take money from investors at this juncture and probably grow companies relatively more systematically without taking too much of a debt burden. So that's where I think we believe that I think there is a good scope for quality papers in the market.
As far as something like a pharma is concerned, would you be overweight on that, or it's time to be overweight on high beta if there is a correction?
The pharma's gain at this point of time is largely due to the fallout in the IT space. IT space, the fallout is also due to the fact that most of the IT companies have shown concern about, I think, their growth in coming period. So as a result of which funds are shifting and probably they want to stay defensive with a part of their portfolio. So allocation is now going towards pharma. Pharma has fortunately corrected, and I think in this correction, many of the pharma companies are available at a price earning ratio in the vicinity of 20 or below 20. So certainly from where they were in 30 and 40s, I think they have come down to 20, below 20, giving larger comfort to the investors. Most of the pharma companies are having good amount of visibility due to the NDTV pipeline that they carry along with them. So 17, 18, 18, 19 financial years are likely to be good years for some of the pharma companies where they have got the product launches in offering.
Can you just explain that in detail, that what does a fallout of IT sector mean? Is it largely technical in terms of fund flows?
Yes, I think when I meant fallout, because of the earning guidance that the IT companies have scaled down, as a result of which I think the investors are probably seeing a no growth and appreciation in their portfolio in the IT companies. And that is where probably the funds are shifting out of IT companies and probably finding shelter in other growth areas, including pharma, where they are playing defensive. At the same time, I think the steady growth and the visibility is available in those companies.
What do you make of the recent move in the small cap, mid cap space? Do you think large caps offer a better value and much more comfort considering valuations versus the mid cap space?
Yes, they do. I would totally agree with that. That I think those who want to invest, I think for them the large cap today offer them a good amount of value because of the availability of the stock in the market, and at the same time comparatively lower valuation. Likes of Reliance are still quoting at 11 times price earning ratio, which is not expensive, which is discount to the overall market as well. And same is the situation with companies like Tata Motors. So you may probably find similar such names coming up, which are basically showing a good amount of valuation of the bargain that one could possibly have. And that's creating a situation of arbitrage that I think if the large caps are available at a lower valuation, they could be the preferred choice of buying vis-a-vis some of the expensive ones. Unfortunate part of, I think they don't move in a tandem with this particular expectation, also due to the fact that majority of the ETFs, and particularly global ETFs, who swing around in the market, play around in the market with algos, I think they definitely, I think, want to buy and sell large cap companies due to the sheer liquidity that they provide. And as a result of which, I think the upside, I think, is getting kept at every juncture, which I may believe that I think it's good. But maybe I think that's where I think the investors are not finding, I think, a complete upside into the large cap stocks, which I believe that I think coming period, you would see, I think, a significant jump in some of the large cap companies.
Deven, thank you so much for taking out time for us. Hope to see you again.